What would you do if a nation held 300 billion barrels of the world's most valuable fossil fuel, more than Saudi Arabia? What if this resource lay just 2,000 miles from your shores, yet was never producing at scale and never truly serving the global market? And what if the world's most powerful military and economic superpower didn't invade because of oil, but for something far bigger? Something buried beneath the numbers that almost everyone gets wrong? Today, we are going to tell the real story behind the U.S. operation in Venezuela. Why it happened now, why it matters, and why most mainstream explanations are incomplete or misleading. Stay with me because we're about to flip the conventional narrative on its head. Venezuela's oil wealth. Venezuela is home to the largest proven crude oil reserves on the planet, around 300 billion barrels, roughly 17% of global total reserves. That's more than Saudi Arabia and every OPEC nation except Saudi and Iran. Yet by 2024 to 25, Venezuela's oil production collapsed to under 1 million barrels per day, down from historic highs above 3 million BPD. The reasons are complex: mismanagement of PDVSA, sanctions, restricting access to capital and equipment, and geopolitical isolation. United States perspective. Washington has long considered Latin America within its sphere of influence. Successive U.S. administrations, Republican and Democratic, have oscillated between cooperation and confrontation with Caracas. Venezuela was once a major supplier to U.S. refineries. Sanctions imposed in 2019 effectively shut down that trade. Trump administration, in 2025 to 26 actions, in late 2025 and early 2026, operations under the name Operation Southern Spear saw a maritime blockade and seizures of Venezuelan-linked oil tankers, the military capture of President Nicolas Maduro, who was flown to the U.S. to face criminal charges, U.S. government statements that it would control Venezuelan oil sales indefinitely and market barrels to benefit Venezuelans and Americans. The official justifications centered on combating narcotics trafficking, terrorism, and human rights abuses. Yet as one analysis put it, these explanations are widely seen as pretexts, masking deeper strategic objectives, geopolitical positioning, and control of Venezuela's energy resources. Post-World War II and nationalization. In the early and mid-20th century, U.S. oil companies were deeply involved in developing Venezuelan oil, investing billions in making Venezuela a stable exporter to U.S. refineries. But in 1976, Venezuela nationalized its oil industry, creating PDVSA and removing foreign control. This wasn't just economics. It was political, a push for sovereignty and control over resource rent that had historically flowed abroad. From economic powerhouse to socialist icon, under Hugo Chavez, starting in the late 1990s. Venezuela used oil revenues to fund expansive social programs and to build alliances with Cuba, China, and Russia. This pro-socialist stance made Caracas a thorn in Washington's strategic vision for the region. Collapse and sanctions. By 2014-15, falling oil prices combined with mismanagement spiraled Venezuela into crisis. U.S. sanctions from 2017 onward, targeting PDVSA and restricting access to U.S. capital markets, choked the economy. External analysts report that sanctions dealt a blow to Venezuela's government revenue and further crippled its oil sector. This set the stage for increasing U.S. pressure. China, Russia, and the New Triangle. While the U.S. squeezed with sanctions, Venezuela pivoted toward China and Russia. China became a major creditor and buyer under oil forloan arrangements. Russia offered technical and political support. This shift dramatically altered the geopolitical calculus. Washington could no longer treat Venezuela as a purely regional issue. It had become a node in a global contest with Beijing and Moscow, blockades and seizures. In late 2025, multiple oil tankers were seized by U.S. forces or turned back due to the blockade, immobilizing crude exports and draining PDVSA revenue streams. At the same time, U.S. rhetoric explicitly tied the move to long-standing grievances over stolen assets. The blockade was just economic, it was strategic, cutting off Caracas' ability to mobilize its most liquid asset, crude oil. Maduro captured. In January 2026, U.S. forces captured Venezuelan President Nicolas Maduro. This was not a symbolic move. was a decisive operational shift. It instantly removed the political anchor for Venezuelan sovereignty and empowered US-backed authorities in Caracas. Control over oil revenues. Under the new arrangement, oil export revenues are being routed through accounts controlled or overseen by U.S. authorities, shaping creditor priorities and undermining Chinese leverage and debt restructuring. This effectively puts Washington in the driver's seat for how Venezuelan natural resources are monetized. International backlash. China condemned the seizures and U.S. actions as violations of international law. Russia has publicly criticized the moves as piracy. These geopolitical rifts complicate any effort to rebuild stable multilateral cooperation around Venezuelan debt and reconstruction. Domestic Venezuelan turmoil. Within Venezuela, political dynamics remain unstable. Leaked communications suggest internal tensions within the former Maduro regime and accusations of betrayal and coercion during negotiations with U.S. representatives. Economy and humanitarian distress. While oil is edged toward political control, the Venezuelan people endure extreme hardship. Millions displaced, acute hunger and water shortages, and deeply degraded public services, a crisis not solved by regime change alone. Many proposed fixes, sanctions, relief, or reconstruction investment, lack coherent implementation or trust frameworks between parties. Patterns across time. This isn't an isolated case. When nations challenge dominant financial systems or shift toward rival powers, interventions often follow. Think Iraq euro pricing narrative, Libya gold-backed currency proposal, and now Venezuela. Historical parallels show structural power exerted where resource control intersects with geopolitical challenge. The oil dollar system and global finance. One narrative debated but influential in strategic circles holds that America's global financial dominance is strongly linked to the petrodollar system, wherein oil sales are transacted in U.S. dollars. Venezuela's flirtation with alternative currencies and deeper ties to China posed a symbolic challenge. While the direct causal chain is debated, global energy finance is inseparable from reserve currency dynamics. This was never just oil. It was about reclaiming strategic influence over a key resource corridor blocked by decades of sanction-driven isolation and dominated by Chinese and Russian interest. U.S. actions were conditioned by oil realities, but not reducible to them. Resource wealth is vulnerability when infrastructure fails. Venezuela's oil fields are vast, but production at scale requires capital, technology, and stable markets. Sanctions deprived PDVSA of all three. Geopolitics trumps economics. The U.S. move must be understood in the context of global power competition, where local resources become chess pieces. We are witnessing a new form of energy geopolitics, one where exploitation isn't to purely economic extraction but systemic restructuring of national sovereignty under the guise of security and legal justifications. If this doesn't alarm you, consider this. Who gets to claim and sell resources, and under whose authority may define the next decades of global power? If you want deeper analyses like this, unpacking geopolitics, energy, and the real factors behind headline events, subscribe, hit the notification bell, and leave a comment below with which part of the Venezuela story you want us to explore next.